Hello everyone, today's video is going to be part 2 of how to predict what the year is going to do and how we can take advantage of it. I'm going to show you that in just a moment. Before we begin, remember that trading is risky. Please don't trade with funds. You can't afford to lose. There are risks involved with trading. So right now I have the NASDAQ. This is the entire year of the NASDAQ, starting in January 2023 and going all the way to where we are right now, and happens to be December 27th. So this is pretty much the entire year. And what I'm going to do is show you and just follow up based on that previous video. So if you haven't watched that video, please check the link in the description on the forecasting for how we understand the market's going to work in the following year, which we're coming up in 2024. Check out that video. But what we're going to do here in this video is cover the entries. So if you look here at the year as it starts to go higher and higher, the first part of the method, seeing whether or not we have a January higher than open, and we do, right? So this is January 3rd and this is February, so definitely a higher close than open January 2023. But what we want to do next, because we just can't jump on board and buy the market, we're going to wait for a pullback. A lot of traders look at pullbacks in a different way, whether you're using an indicator like a moving average or something else. I don't quite go that deep into it. We try to focus on price action. So what we're looking at is 4 or 5 days of retracement after it makes a new high. So you see here that this is a new high. So I'm just going to put this just like so. This is a new high. So we have here about 1, 2, 3, 4, 5, 6, 7, 8, where the market is not continuing higher. It's a pullback. So what I want to do is I want to wait until there's a clear retracement or a clear pullback. So you see the market continues to retrace and pull back and retrace and pull back, and then it comes back up. So we call that, as many of you already know, a double top. Where we enter in this type of a method is I want to use here a 50% retracement tool, which NinjaTrader has, and a lot of other trading platforms have this retracement tool. And wherever the market stops moving, which it stops moving here and starts to climb back up, I'm going to wait until it closes back up, or maybe a couple of points above the 50% retracement, in order to buy it. The goal is to see the market test the highs, or a double top, as we typically call it, that happened earlier in the year. We want to see this happen typically like a pop, or like almost an immediate correction right back to where it was trading. Markets love to test where they've been. It's a very common theme in trading. They love to test pricing. So that is the first way, and I think it's a safer way to play this, because we already understand the market is always pushing higher and higher based on this method. And now we're going to take advantage of only buying once it breaks the midpoint, either closes or a couple of points above the midpoint. Don't enter right here at the midpoint. Let it break it. So it's proving to you that it's continuing, and it should be almost like a straight shot, straight up. That's one way. The other way we can do it is once the market breaks the highs, usually it goes higher. It's a typical stochastic pop in the old timers, what they used to call it. And here you see that as soon as the market broke, it went higher, right? So not by a lot or not by much, but we're looking for that pop as soon as it breaks the highs, as if all the stops are hit. All the traders that are sellers, they usually put their stops right at the highs, and then the market accelerates based on the reversals and the transactions that are happening because of those stops. Okay, another retracement, but again, very important, it has to make a new high. So this is a new high. How many bars do we have retracing? 1, 2, 3, 4, 5, 6, 7. Okay, so 5 I think is a good number to understand that the market is retracing or pulling back. And then we have here from the highest high the market begins to climb back up, and we're long, again testing the highs. Another retracement, not really 5 candles here, 1, 2, 3, 4, so you may not want to count this, and it's not a new high either, so I can't really count that. But here we have, once it breaks the high, it's almost as if it fuels the market to the upside. So you have an opportunity to get long once it breaks the 50% mark back up to test the highs, or in addition to going long once it breaks the highs of the year. In this case, it's highs of the year, and you're going to see it just explode. Now this is much larger than the previous one, and you can see that it was really good. Again, look for the retracement or pullback. This isn't really enough. It's only 3 or 4 days. This isn't really enough. I don't think this is enough either, but this is enough. This is definitely enough action that we could say 5 days, 4 or 5 days. It's clear to us that there's a retracement. What do? We do this. This is in June or July, yeah, June of 2023. Once it breaks the high, we're looking for it to test the high, which it did, and then the follow-up, once it tests the high, would be the pop and making new highs. So it happened again. And then we have a huge retracement here. Again, be patient, right? Be nice and patient as the market comes all the way down. And then let me just realign this here. Remember that our goal is to see with this method that the market is going to go higher, close higher, trade higher, but we can't hold on to a losing position, or we can't hold on to a position that's just going short and short and short. So be very patient. You see the market continuing to go lower and lower and lower, and we do this. And now, once it breaks the midpoint and starts its way back up, that's when you enter long. We enter long once it breaks the highs, like so. Now, you may be asking, what if the market doesn't continue higher? You enter, and as soon as you enter, it reverses. Well, you have to have a stop. I would say if the market, in each of these situations, very rarely does it ever turn around. Once it breaks the high, there's a day that closes. It just goes straight up. Now, if it comes back down a day, 2 days, 3 days, that's when it's clear that this is not happening. So every single example, once it breaks the midpoint, it's almost an immediate run. It never turns back around and closes back below the midpoint. And so you could see that here as well. Let me just straighten this out for everybody. Once it breaks the high, it keeps on going. It does not come back down. And if it did, like I said, 2 days, 3 days at the most, that it's trading below the midpoint, that's where we exit the trade. Okay? Same thing here. Once it breaks, it goes straight up, never comes back down. Same thing, once it breaks, it never comes back below, right? Never trades below the midpoint, right? Closes below, I should say. Closes below the midpoint. You may play with it, but it doesn't stay there or close there. All right, and let's take a look. Now we made a new high as the last opportunity. This is the latest high here, December 18th, 19th. It closed above. What happened? Just another pop. Every time it breaks the highs of the current year, it pops. That's what we want as our option to go long, or the midpoint option to go long once it breaks the midpoint. You can use them both. This is the NASDAQ, so you can see it's a financial. I can do the same thing. Let me just go to the E-mini S&P, and I'll do the same exact thing because the financials usually work in tandem. So let me just add here the financials. Let me remove this here. This is the autopilot trading system that's working on another chart, so I have it on here as well, but please don't pay too much attention here to the autopilot trading system that's working in the background. It's just because it's on the chart. But we did the same exact thing here is January of 2023, right over here, January 2023, and you can see that every time the market made a retracement and then broke and came back up, usually it wants to test the highs of the year, and once it does that, you can then say I want to exit the trade, or I want to enter once again, and it'll pop. So that's really important. And then you just do it all year long. Is there a retracement at least 4 or 5 days? So this is the E-mini S&P. It may not look too much different than the NASDAQ. There's the retracement. 4 or 5 candles clear. As soon as it pops, you're long, and then once it breaks the highs of the day, once again it pops, almost like a like it's hitting the stops of traders that are short, and then everybody's reversing and hitting the reverse key, and stops are getting hit, and so they're buying back, and that's what you're seeing. It's almost an acceleration in the opposite direction. Same thing is true here. There's a huge retracement here, just like it was in the NASDAQ, and so once it finds its leg, its footing, and it starts to come back from this low, from this high, a day or two, a couple of points, you're gonna ride it all the way back up. Like I said, if it happens to come down, you go long here on the doji. Here, let's say the very next day on this doji over here, and the next day it closes below. All right, let me hold on to it. The next day it comes back up, you're still holding on to it. The next day it closes below, it closes below. That's when I say it's time to get out. Each of these situations, when they work, they don't hover around or reverse. They go straight up, like every day is just continuing to edge higher and higher, closing higher. You want to see it continuing to close above the midpoint. Okay, and so here we are, and you can do this in the Dow, the NASDAQ, the Russell, the S&P 500, E-mini, micros, it doesn't matter. I haven't tested it on other markets, although I would say that it would be very similar. If you're looking at a currency, if you're looking at a bond, if you're looking at something similar, it's always to the long side. Now, if you haven't already watched part 1, I definitely recommend looking at the links below this video and watching part number 1. If you have any questions, visit DayTradeToWin.com. Wishing everyone a happy new year, and let's see what 2024 has to bring. I'll do a follow-up on these videos and on this method if we see an opportunity, especially as we get through January. We'll know right away if it's going to be an up year or not. Take care, everyone. Bye-bye now. If you missed part 1 of the forecast, click the link in the description below. You'll be able to watch part 1 of the forecast. Subscribe to the DayTradeToWin YouTube channel, and remember, we have an awesome mentorship class which includes all our software and courses and videos under one package. Until next time, good trading.